Well, 2022 was a challenging year for Akzo. We were in a market where the war in Ukraine had a drastic impact on consumer confidence in Europe, particularly. And as you know, we're 50% Europe. So we had a year where we had revenue growth based on inflationary pricing, because it was significant inflation. But we had volumes down and profitability under pressure. So challenging year, but with improvements in sight in 2023.
It's very interesting that 11% is the number that you've been able to push through in terms of rising prices to end users. Is that going to happen again this year, or how are you intending to manage the long tail of higher input costs?
Well, if you look back, pricing for us went up 23.5% over 2 years. So quite significant, but that 23.5% only keeps up with inflation. So there's no margin expansion. It's really just inflationary pricing. If you look forward to 2023, it's a year where there's still significant inflation, and we are still adjusting prices up in certain parts of the world. But in other parts of the world, pricing is already under pressure. Raw materials have started coming down, and in China, there's already significant price pressure. But in Europe, we're still fighting increased wages, increased road transport, high energy costs, and therefore there's still some price increases to come, if only to keep up with inflation.
Grégoire, can I ask you about the demand story then, because you've got lower volumes in the final quarter, that 9% impacting operating income as well. Where's the demand destruction coming from at this point? And we know it's been obviously a very difficult backdrop, higher interest rates, cost of living crisis, but where is demand falling at this point?
Well, in Q4, it was Europe and China. And in Europe, it's a case of low consumer confidence. There was still destocking. You were talking a minute ago about levels of inventories at retailers, and there was still significant destocking in Europe in Q4. There's going to be a little bit of it in Q1, but I think destocking from the retail perspective might be coming to an end. But demand remains soft. And as much as our professional segment continues to be resilient, the DIY aspect of the market has been under pressure. And then in China, you've got the lockdowns in Q4 that had a drastic impact on the market. But we see positive signs coming out of China, and we believe the country is positioned for a rebound starting in Q2.
Grégoire, just to dig a little bit deeper on some of the costs here, because we were just having this discussion on the back of the Moller-Maersk numbers about freight rates coming down. In your numbers in the final quarter, you're pointing to higher freight costs. At what point do you think this starts to reverse, and what sort of dynamics are you looking for in the freight rates?
Well, I think it's interesting because we might be talking about two different things, because you're having kind of a geopolitical debate about globalization. And if you see sea freight's gone down and has gone down significantly, and that's an improving picture. But our products don't travel very far. You know, decorative paints, there's a lot of water and low-cost liquids, and therefore they don't travel very far, I'm sorry. And then you end up with a lot of road transport. And if you look at road transport in Europe, that's still going up, and it will continue to go up in 2023.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.